Jumping over to volatility, we saw realized vol hit rock bottom about this time last week. So we had sort of in the below 30 area in Bitcoin. Same story on ETH. I mean, these are the lows in realized vol that we've seen in a very long time. Since then, you can see we have trended higher on the back of the break higher over the weekend. Implieds did sell off into the weekend only to get bought on that break. So you saw that's typical price action that we are seeing where gamma gets sold post expiry into the weekend, and then because we had a reason to buy it and we saw some cool buying come in, that took vol higher again, basically. Okay. Now implied vols, you can see, have been holding a premium. So these red bars signify positive carry that we've had for a couple of weeks now, maybe even longer than that. So there is still positive carry in terms of selling options, selling gamma in crypto vol relative to realized. But bear in mind, we've got the votes going through Congress this week. If that fails, things could get a bit spicy. You've got US ISM and you've got non-farm payrolls on Friday. So all of these are potential catalysts for macro moves. But like I say, because we don't think crypto is necessarily moving that much on every little macro story, we're not overly concerned that things are going to move too dramatically, especially because we've popped straight back into the middle of the range, and this range has been established for quite some time. Okay, and looking at the other asset classes, gold does remain under pressure as the dollar and yields have pushed higher. That would normally be bad for crypto, especially BTC, but the relative strength in crypto over the weekend may embolden the bulls in the near term. We are wary of that liquidity drain looking 2 months forward, but for the next week or two, we're thinking the price action looks okay. And so, and also the pop in vol is presenting opportunities maybe to sell some gamma if you believe the ranges are going to be respected. Okay. Looking at that term structure in a bit more detail, you can see here front end popping there on Bitcoin. So you've got a pretty flat curve on Bitcoin. You've got a flat curve out to kind of 2 months on Ethereum, but then it does go steeper. That's just because that back end Ethereum vol is holding more of a bid, because people look at the long dated chart between Ethereum and Bitcoin vol and say, this down here at 0 is not sustainable long term. So they don't really want to let the long term vol go Bitcoin over. So anything 6 months and out is still holding a small premium like for Ethereum, but the front end you can see is getting dragged down. So Ethereum front end is actually trading below Bitcoin front end because of what the realized is doing. On a 10-day realized, you have got Bitcoin slightly over. On a 30-day realized, you've still got Ethereum slightly over. But in general, it's that front end that really gets dragged down into negative territory, and you would need this condition to persist for many, many months for people to really throw in the towel and not want to own Ethereum vol in the back end, basically. Okay, or you need more structured product supply, which just keeps on supplying the street with that stuff. And we are starting to see signs of that. So you don't be surprised that might actually happen later on in the year. But for now, they're focusing the selling on the front end of the curve. Okay. Now, and then, that this is the Ethereum, when it's realizing so little, that's how you harvest that, right? When realized vol is really low, you sell gamma. How do you sell gamma? You sell short dated options. Now, the removal of this large 1800 strike pin that I talked about on the 27th of May, so last Friday, that might help realize vols in Ethereum. So if we think Ethereum realize has been somewhat suppressed by the fact that there's been this big 1800 pin that the street's been long. Now, because that's expired, we think there's a chance now Ethereum's a bit freer to move. We did see the evidence of that over the weekend, and we'll see if it does start to move more like its old beta that it used to have to Bitcoin, then this will justify higher vol, and we'll see this spread move back up again. Okay, but literally it's only expired on Friday, so we're going to need more data to see if that realized can sustain a higher level now that there's less gamma in the street. Okay, and if that was to happen, and if gold continues to lose its shine because the debt ceiling's done, Bitcoin might lose its dominance. If we do, then let's get another wave of buying. Bitcoin doesn't have the gold flight to quality thing driving it, then maybe Ethereum becomes a bit more dominant for a period of a few weeks, and we could see more realized to the upside, right? We certainly think that to the downside in crypto, you are likely to see Ethereum move more, right? And be more sensitive to what goes on in risk assets, and Bitcoin to catch maybe that flight to quality bid that gold does, assuming gold does do well in a risk off. But on the upside as well, depending on what the drivers and the catalysts are, now that Ethereum's got that gamma go away, there's a shot that Ethereum maybe could have a little bit of a resurgence, right? So we still favor owning Ethereum vol and having a long vol bias on Ethereum versus Bitcoin, even though it hasn't performed very well recently. Okay. Looking at SKEW, once again, flipping back into call premium. Markets popped on Saturday. We've seen weekly SKEW fade again, though. It does remain extremely spot sensitive, that 1 week SKEW. Ethereum SKEW is still in put premium, but it has reduced down to only around 1 vol point. It was, 3-4 vols like a week ago. As Ethereum did manage to rally 4% with Bitcoin. So maybe people are thinking, all right, this thing might be worth owning calls on again. This high correlation between spot and SKEW shows us low conviction in crypto markets, lack of structural hedging flows from institutions, and traders basically using those low delta wings to try and chase any potential range breaks, which keep failing, right? Because we can't break out of 1,700, 2,000 on ETH, we can't break out of 26,000, 30,000 on Bitcoin. People just keep trying to use those low conviction, low delta options in the hope that the break comes, but they're not really committing to it. And like I said, there's not enough instos that are structurally long so much exposure that they want to just constantly buy protection and do risk reversals, which would make that put SKEW be more sustained, like we saw last year, for example, right? So these are the things. Now, we still think put switches make sense. So long Ethereum puts, selling Bitcoin puts is a clever way to hedge downside, because we think if there is weakness into Q3, we think the flight to safety bid makes Bitcoin sell off less. If we do get a true liquidity driven risk off move, like some people are calling for. So that would be for us, would be a good relative value play potentially. Looking at the dashboards, because of the rally we've had, obviously they flipped to buy puts now in both Bitcoin and Ethereum. Had you bought calls last week, you would have done okay on that because the mean reversion has worked. Vol carry, as we said, is positive on both Bitcoin and Ethereum, but it's in the 50th percentile. So you'd expect it to generally be positive. So it's not so juicy that it's just a close your eyes and sell gamma type event, basically, right? Certainly not just sell outright vol at these lows in vol, right? That's why the strategy compass is on the bottom of the panel, even though it's over here on the right side. The fact that it's at the bottom is telling you just selling outright options is pretty risky given the levels of vol. Okay, so if you want to sell gamma, there are better ways to do it, like calendars, which we'll talk about in a bit. Okay, flow wise, a slight uptick in option volumes, but not huge. Probably more kind of expiry cleaning, as May rolls off. But we are still seeing call activity dominating. On the initial spot weakness, last week we did see calls and call spreads getting sold. We had some chunky 28, 30K call spreads getting sold in June Bitcoin. That's here. And then once we got down to the lows last week, some put selling came out. So you saw the 24K puts getting sold in June. And then into the weekend, we did see some spec call buying. 2nd of June, these blue bars here is the 2nd of June expiry. People buying like the 28K, 27.5K calls, which turned out to be a good trade because we then blasted through that strike. As more call buying came in actually on screen, July and August, 34K calls got bought in 2,000 lots on screen, which is pretty big volume. And that helped drive the curve higher over the weekend, basically. So that's what we're seeing here. You see that big dark blue there around the 34K strike zone. That was the on-screen buying that came in. Okay. Then on Ethereum flows, we're kind of seeing the same as what we saw last week. Big calendars going through, kind of dwarfing any other trades. So there was the big June SEP calendar that got sold. This time it was a June-July calendar on the 21 line that got sold. Again, this seems to be people who are structurally long ETH, either staked it or whatever they've done with it. It's not going anywhere, and they overwrite against it to earn extra yield. So not only do they earn a staking yield for staking their ETH, they're effectively doubling up that yield by selling extra premium on the upside. Okay, and then if they have to then deliver that, because if they're in blast through the strike, then they'll have to unstake their ETH and deliver it, right? If they do that, it's call overwriting. So we think that call overwriting is pretty systematic in big size going on in Ethereum, and they keep rolling their short calls. So they're covering June calls, and they're selling Julys, they've been selling Septembers. So that's the systematic flow that keeps supplying Vega to the market on Ethereum. On the flip side of that, there was some buying seen in the likes of the 2000 and the 2200 calls in June. That's these purple bars. Again, some people speculating, trying to get long, thinking that this thing might actually start to rally now because of some of the expiries that we've seen. Okay, what about gamma positioning that I keep going on about? If we want to look at that graphically, you can see here. So Bitcoin gamma has gone into negative. It was small, sort of positive, has been moving around a bit, to be fair. It did spike down on expiry, then rallied, and now it's back to small negative. You can see here, you got quite a bit of short strikes for the dealers in the front end out to June. So across, the red is the 2nd of June, the blue is the 30th of June. So out to all June expiries, anywhere between 27K, 31K, dealers look like they are net short in terms of Bitcoin gamma. Looking at Ethereum, we had a big spike into long gamma into the expiry, and then look, it dropped to 0 and it's been flatlining at 0. And that's because we had a massive 1800 strike in May expiry that went away. We do still have this big long strike in June expiry, 30th of June. But look at all the shorts that have been building, right? All these shorts that have been building in June are potentially going to provide some short gamma to dealers if it rallies. So we do think ETH is less pinned than it was. That doesn't mean it's going to have massive moves, but just at the margin, it's less pinned than it was. And the evidence over the weekend seems to suggest that is also the case. And if we were to get above 2000, which is this area here, then certainly there's more short strikes than long strikes around. And we might then start to build off that, okay? Or we might see vols actually re-rate higher a little bit because people don't own as much optionality locally. So that's what we're looking for potentially there. But just bearing in mind, positioning is a lot more neutral than it was. All right, what have I been up to? That is it for Crypto Weekly. And I will catch you guys in a week's time. Thanks a lot.